Hello there, everyone. Today I'm going to be sharing some of my thoughts on Peninsula Energy, the Australia listed US based producer of uranium. Just want to reiterate here, I'm not a believer that 232 should come into effect. I'm probably going to do a video just about 232, but I don't believe personally that it should come, but I will try and present this video neutrally. Now, what's the story about this company? Well, it's an Australian-based company, and they bought a U.S. asset in Wyoming, actually. Wyoming then becomes a can-do state, so they go into everything was working out well. They find the resource in 2012. They start mining in December of 2015. The spot price is $32 at the time. Confident, bold move by the management. They seems like they might know what they're doing. And then their production doesn't meet what they think it's going to do at higher costs, at lower production rates, that is, and the spot price falls. And then we are now. Now here, direct from numbers given in their investor presentation is, in my view, the greatest bull case for this company. The clearest path to value, one might say. Now, at an 8% per year discount, the net present value of their Lance asset is 157 million at $49 uranium, with an all-in sustaining cost of 31.77. Now that, given that their market cap is 31.65 million, would seem to imply a 5x. Now, worth noting, again, that is using a $49 uranium, which means if they produce much of their uranium below $49, that number will drop. I only mention this because it looks like they're going to. So, as I said in the beginning of this video, they are a producer. They produce uranium. They pull it out of the ground and sell it. Now, why do I bring focus to this? Well, because right now, the producers are claiming that nobody could make money with the price of uranium this low. Is there a problem with that? Now, to go further with that track, if you look, not only have they been producing for the past 3 and a bit years, but they plan on ramping up stage 1 of their new low pH production in 2019, and their all-in sustaining cost will be $40.58 for stage 1. But it will ramp all the way up to eventually around $30 to $31. Again, if you can't see where I'm going with this, today the spot price is around $29. Why are they producing? Well, it seems they're producing because they're lucky enough to be able to deliver into a $52 contract. So they have 6.4 million, up to 6.4, between 4 point something and 6.4 million pounds of uranium to deliver in the next 7 years. And some of it they're buying, which I think is smart because you have a contract. Even at today's, I would love to have that $52 contract because if it were me, I would not dilute my assets and not dilute my shareholders, not destroy my assets and producing at a loss. I would just buy in the spot market at whatever the price was. Now, that granted, they have been doing this since it was 20 something dollars, but even today, if you have a $50 contract, buy at 30, sell at 50, $20 a pound, no asset depletion, you just free $128 million. Take it. Just take it. what does Peninsula Energy do? Well, they buy some at $21 in the spot market, average price. Very good. I agree. Smart thing to do. And they make money with that. Then they produce some from their asset, and after their all-in sustaining cost, lose some money. I'm not sure if this whole thing that I just said is net positive or net negative. I honestly don't know. So as I mentioned before, their Lance asset, which is their primary asset, is in Wyoming, which A, yes, is a can-do state, which is positive, but B, it's colder in Wyoming than in many of the other ISR capable places in the US. And while cold may not be completely it's an issue by itself, there is freezing in certain production, which my understanding is carries increased costs rather than a similar grade in a warm place in the US. So worth noting. Now my thoughts on where this company is in relation to the uranium cycle. Well, as I mentioned before, they started production 3 years ago, so not the greatest timing, for being honest, not great. But, if you're very bullish on uranium now, then it looks like they're trying to ramp up with their asset so that they can time the cycle. Now, again, they have been wrong for 3 years now, but, if you're thinking uranium is going up soon, then they may be right now. And I mean, I hope that's their thesis, because otherwise they're just wasting production out of their asset. So let's hope that that's why they're doing it and not just so that they can call themselves a producer. So I have a number of questions about what could be next for Peninsula. I don't know. I'm not a chemist. I'm not a geologist. I'm not a chemical engineer or anything like that. I don't know if their new pH pH plan is going to work. I don't know if the price of uranium will recover sooner or later. I don't know. They seem to be guessing sooner. They could be right. I'm not going to argue on that. Will their operation, so basically, will their operations work as expected? I don't know. Will their costs be in line with expectations? And will their project start working more fluidly than it was before? I don't know. Now, there is a note of caution regarding their balance sheet because it looks like they have $17 million in debt, which they're paying a 10 to 12% interest rate on, which is not insignificant. Now, they do have $7.5 million in cash, which, negates almost half of that. However, at present, the debt seems to be due in April of 2020, which is less than a year and a half away. It's about a year and a quarter. Now, based on their run rate of how profitable they seem to be, assuming that they're getting all their uranium at $21 and selling it for a $29 profit at 50 whatever, but assuming they're making $29 per pound and they have no other costs, then it takes a year and a half for them to earn $9.789 million. So if they're not able to refinance the debt and push it to a later date, which I would think they'll probably be able to do in one way or another, they might have to dilute a little bit. But it's not a major concern, I wouldn't think, but it wouldn't surprise me if they had to issue shares in the next year and a bit. Now, similarly, I thought it's worthy to make a note about their resources. If you look at plans for gold mines and such, they only use, or most of them, many of them that I've seen recently, only use proven and probable resources. Now, if you go to the uranium, I've seen numerous companies use measured and indicated in their plans. But if you look at Peninsula, they have 3.9 million measured and 11.9 million pounds of indicated, which is fine. I've seen comparable stuff in uranium companies that use measured and indicated when they're planning things out. But the bulk of the resources for Peninsula are inferred, being 38.1 million. Now, they do only assume 60% of those resources will be, I guess, produced with their current plan. But that's rather unusual amongst the companies that I've looked at in terms of planning on using the inferred resources, because normally you'd have to pay a bit, maybe drill a bit to make sure they're there, more there than you just think they're there. But that would be me. But I'm not worried about that. I'm sure they'll drill and, figure out what they have before they spend money to try and pull it out of the ground. Just noteworthy. Now, I have very few strong points about this company. I it's obviously it's good that they have ISR, which is lower cost, but it's less good that their ISR is in a cold climate. And similarly, on the balance, it's good that they have a contract at 50 whatever dollars that they're still producing into, but again, not so good that with the spot price at 29, that they're producing at a 41 all-in sustaining cost when they could just be buying instead of producing. Now they probably have a reason. It's probably to get things rolling towards ramping up their asset. But I don't know if that's the strategy I would be using. But it probably has its purposes. Now, as I mentioned at the beginning of this presentation, their assets are their greatest bullish case if they can do what they say they're going to, because they're clearest, like they have a clear path to value, but I don't know if it will start working better than it has been. Now, that being said, I personally have questions about the management decisions, and management effectiveness. For that reason, I don't plan on investing in Peninsula, at least not at any price resembling current. But if you think that the management will be successful in their what they say they're going to do, there's definite value here. Now, as always, thanks for watching. I hope you all enjoyed, and remember this, even if you think this is me being negative, I don't hate your stock. I'm just calling it the way I see it. I would tell you what I don't like about the company, even if I owned it, which I do not here, but yep, I have 4, I think, videos that are half made, or more than half, and then I still have to do one more that was requested here. I believe there's just the one more. And then I'll be making more videos on assorted topics. But again, thanks for watching. Hope you all enjoyed. Let me know if you want more. I'll add them to the list, but I want to do some other ones in between. And until then, thanks, and catch you next time.